tax-free retirement and capital access, the dual power of whole life insurance policies. And,
Mm-hmm.
when I look at this, there are many different vehicles that we could use, right? And life insurance is just one of those vehicles. But I believe it is short sighted and myopic to think that life insurance is there just for life insurance. That this is not a sexy conversation that we would want to have with the audience if we were just talking about life insurance, right?
Mm-hmm.
But what we could communicate to our audience is that life insurance could actually be a strategic pillar in one's life, in one's business, right? Because there are some tax free components that you could actually use when it comes to a life insurance policy, right? And one of the, I noticed that this was a way that the very wealthy, the uber wealthy, actually use not only their assets, they use their assets to buy more assets, right?
Yeah.
But what we are actually going to talk about today is how they can use their insurance policy as an asset to go and purchase other assets at the same time. And what really made me see the value of this is the fact that when Elon Musk went to go and purchase what was formerly known as Twitter, he actually used bank financing. But when it comes to bank financing, they always want you to put something down as collateral. And what he put down as collateral was his Twitter shares. No, he used his Tesla shares as collateral, right,
Mm.
to purchase the company. And I thought, well, I asked myself because I'm thinking from the mindset that I had at the time was that why didn't he sell his shares? Right? But if he had sold his shares, he would have probably encountered a 15% capital gains tax, right? So he would have encountered a 15% capital gains tax. Whereas if you have the type of resources that he has, you're probably going to pay no more than 5 or 6% interest on the loans that he took out because they were collateralized at the same time. Does that make sense?
Makes sense. And I think just before we even start, for in case we have any new listeners on our show today, I'm just going to walk through very quickly what whole life insurance is. A whole life insurance policy basically is a policy that allows you to enjoy two benefits. It's an insurance policy and it allows you to have a death benefit. A lot of us, especially if you are a business owner or you are a parent or you have any other people who are dependent on you, typically you would want to have some type of insurance to make sure that when you pass, your beneficiaries can get some type of financial assistance, can get some funds that can help them navigate life without you and without the income or whatever you were bringing to the table. So when you are in a position where you can leave something like that for your beneficiaries, that helps a lot in terms of reducing the stress of figuring things out as well as grieving. So your whole life insurance policy will give you a death benefit. But not only that, it also has a living benefit. A living benefit in the sense that this is something that you enjoy right now, today, as you are alive. You don't have to pass on, you don't have to die first for you to enjoy that benefit. Now, this is one of the most distinguishing factors about whole life insurance versus term life insurance. where a lot of people say they are more comfortable with having a policy like a whole life insurance because they know that they can enjoy those two benefits. They know that when they pass, their families are going to get some money from the policy. And they know that as of today, if they needed access to funds, they also have access to those funds. Now, those funds is why we are what we are talking about here today, that as the policy has access to those funds can afford you a level of tax-free retirement and access to capital, whether it's capital for your business or whether it's just a policy loan that you may need to pay for your child's education or to go and buy more assets so that you can grow your wealth. That is capital that you have access to. Anything else that you want to add from that?
No, that is a good point and leads us right into the first topic that we wanted to cover is the
Yes.
tax advantage growth, how a whole life policy could be used for tax advantage growth as well as retirement income. And to
So as
set that up, let hold on one second. The
Mhm.
key point that we want to uncover here is that whole life insurance has cash value component that grows tax deferred and can be accessed through tax free policy loans,
Yes.
right?
Hmm.
But what is the biggest contrast that you have with that, right? The biggest contrast that you have with that is when you compare. Well, let me take a step back, right? When we were having a part of this conversation before, you had mentioned that having a policy is not an investment. You said something along those lines? Is that the way to see it? Because I think when most people are having this conversation, they want to compare a policy versus an investment, like if they were buying a mutual fund or something like that.
When you think about it, I mean, an investment says I am putting in 500 and I'm expecting a certain rate of um, return, right?
Hmm.
And that's not necessarily how a whole life policy has been created. Insurance
Hmm.
policies are not created to serve as an investment where you say, I'm putting in X, and because I'm putting in X, my rate of return is going to be Y. However, you can use your cash or you can use the funds that are within that policy to make investments.
Hmm.
And from those investments, then you can, yes, see how is this investment performing versus how much I've put in. You can have access to that cash and use that cash, but you cannot call the entire policy an investment.
Hmm.
That's the
Got it.
distinction there. Yeah.